we're going to be covering BlackBerry stock because they are reporting earnings on September 27th, 2022 at 5:30 p.m. Eastern Time. This is for the Q2 results for fiscal year 2023. I'm going to be going over analyst expectations, what I think they're going to hit in terms of revenue and earnings per share, the stock price in terms of support levels and resistance levels, how I think it will react, how shorted the stock is, and a little bit of the evaluation and comparison from previous quarter and the year-over-year quarter growth or decline potentially. So we're going to go over all that stuff. Now, if you want to look at the earnings call and listen in, just go to BlackBerry Investor Relations website and you can listen into it. You can look at past performances and transcripts and so on and so forth. We're going to take a look at the analyst expectations. This is from RBC Bank, Canadian Bank. They are expecting revenue to come in at 169 million. Now they are saying that the analyst consensus is at 167 million. I see another source pointing at 165 million. So the range is about 165 to 169 million. Earnings per share, they're expecting to be a loss of 6 cents, and the consensus is about 7 cents. And that goes right on compared to another analyst as well. It's basically on track as theirs. Earnings per share estimate coming in at 7 cents, a loss per share, earnings per share, and revenue at 165 million. Now, the question is, will they beat that expectation or their analyst expectations? And even if they beat it, how good is that? Is it great or is it not great? Now, if we look at, let's just go back to the website exactly. If we look at last quarter, so Q1, that was reported on June 23rd, 2022. Their total revenue was 168 million. So even if they hit 168 million, that would be on the ballpark of the analyst expectations. I don't think necessarily great because we would have quarter over quarter growth. If we had 170 million, we'd have quarter over quarter growth plus beat analyst expectations. That would be great. And then IoT came in at 51 million and cybersecurity came in at 113 million for that quarter. Now, if we look year over year in terms of growth for the same quarter, September 22nd, 2021, which again, ours is being reported on September 27th for the Q2 for this fiscal year. Last year, same time frame, came at 175 million for the total company revenue, which if we hit this, we beat analyst expectations and we would have quarter over quarter growth, but not necessarily year over year growth. We'd have to hit 176 million or 177 million to have everything completed. IoT revenue was at 40 million and cybersecurity was 120 million. Now, in terms of cybersecurity versus last quarter, it has declined. Last quarter was 113 million, I believe, or 115, somewhere around there. And then the IoT revenue did grow. It was 40 million for last year, same quarter, but last quarter was about 50 million, I believe, or 51. I could just pull it up right here for a sec. 51 million, yep. And then cybersecurity was 113. So what we need to see is roughly about 176 or greater to have year-over-year growth and quarter-over-quarter growth plus beating analyst expectations, plus as well having IoT revenue to be higher than 40 to 50, 51 million, so ideally 52 million, and cybersecurity to be over 120 million, 121, so that way it beats the 113 million from the last quarter as well. And then earnings per share to be a loss of, the worst case scenario, 6 or 7 cents. Hopefully it's a loss less than a loss of 6 to 7 cents. It's 5 cents. That'd be great. And that would be the analyst expectations and year-over-year growth overall in every aspect. Now, the question is, what will they have? If we look at Yahoo Finance and look up BlackBerry stock, go to financials, we can see that the financials is at 7. So the reason why I'm looking at the financials breakdown is this is the outlook for the fiscal year. It's at 718 million. If we divide 718 million into 4 quarters, we have 179.5 million per quarter. The reason why I'm pointing that out is because last quarter was the first quarter of the fiscal year, and it came in at 168 million. So that's shy of 11.5 million, if I'm not off, for the quarter in terms of evenly breaking out. So what I'm saying is that that portion that it fell lower than a little bit, that could be divided into the next 3 quarters, not obviously evenly, but possibly towards the end. So probably 4th or 3rd quarter will have the bigger chunk. But I'm thinking if we just need to hit 176 million, and given that estimate divided by 4, it's 179.5. there's a chance that we could hit in the high 70s potentially for a quarter, especially if the first quarter was shy of 179.5 million. That's not guaranteed, by the way. That's just it's almost like a gamble if you want to say that. And then one thing to point out, the earnings per share, or not earnings per share, the quarter is being reported. So this is, again, not, take this with a grain of salt. The earnings is being reported a little bit later than usual. September 27th. We saw that last year was September 22nd. Again, take this with a grain of salt. Doesn't mean it's necessarily true, but sometimes it's not really the greatest sign, just because if it's great earnings, they tend to report it earlier and be anxious to report it. If it's not so great, they don't really tend to try to report it as early as possible. But again, I would take that thought process in terms of a grain of salt. It's not necessarily true all the time, but that's what I'm a little bit concerned about. But overall, the estimates do seem on the low end, so I do expect, for the most part, an earnings beat. But I just hope it's enough to have year-over-year growth. That's what I'm more concerned about. I just want to see year-over-year growth for the same quarter. Now, how short is the stock, or how shorted is this stock? Because that does play a role as well. I'm going to refresh the page because I feel like it's not refreshed correctly. So the stock currently is standing at $5.07. If we look at how short it is, we are seeing the stock, the US side, is somewhere between 5 to 6%, a little bit above 6% shorted. And then on the Canadian side, the BlackBerry.to, it is shorted about 1 point. For some reason, it's not refreshed. I don't know why. On the Canadian side, $6.94, but it is shorted about 1%. So you add both equities together, you got somewhere between 6 to 7% shorted. The reason why that's significant is if it was overly or extremely shorted, it would be above 20%. Then there's a higher chance that the buying could drive the price up even higher in terms of putting a short squeeze into the people who are shorting it. Now, it is not necessarily not shorted enough. It is decently shorted. It's just not extremely shorted at the 6 to 7%. Or yeah, 6 to 7%. It's not extremely shorted. If it was, there's more of a factor that you could drive up a short squeeze overall. Now, the next thing is the support levels and the resistance levels. Now, if this were to drop, so right now we're looking at $5.07 for the stock. If it were to report a bad earnings overall and drop, I'm expecting to bounce off the $4.20 range support level. And I'll show you how I got that. But before we get to that, there is quite a bit of good support at the $4.40, $4.36 range. There was quite a bit of support during this time, mainly predominantly during September 21st, 2020 to November 9th, 2020, right about here. And this support level right here, so I'm going to or actually, let me see if I could do that. Okay, so auto. So this dates back since 2008. I know the company was completely different back then, but I'm going to show how recent it is, and you'll see that the support level does somehow exist. So since 2008, went up, got knocked down as resistance, almost got knocked down in 2011, but it was predominantly right here where it was just nonstop hitting as resistance. So from 2018 all the way till 2019, it would go up, got knocked down, go up, get knocked down, go up, get knocked down, go up, get knocked down, so on and so forth. And then in 2020 of December 28, I believe this was the time they announced the Amazon partnership. They went up and then came back down and bounced that support. Let me see if I could zoom in a little bit so you could see for sure. So it comes down, bounces off that support that dates back since 2008. That was acting as a resistance. And then I believe right about here as well, we do come back down, but it's just too clustered right here right now. But we come back down and bounce off it as support again back in sometime of 2022 of May. Now, if we do come back down, this is where the 420 support level I'm assessing at. It's not going to be a clean 420. It's like $4.26, $4.24, I believe it was. Let's see. So come down and bounce off 426. That's on the low side if expectations are not met and earnings doesn't beat the analyst expectations overall. Now, if we do go up, I'm expecting it to bounce up to the $6.09 range. If it's just a mediocre earnings, somewhere at around $5.77. And the reason why I'm getting that, I'm not showing the great, I apologize, is because based off the support levels right about here when I measured them, or resistance levels, it was causing issues around the $6.09 price point. So $6 naturally is going to cause an issue too as well because it's a clean number, but that's what I'm looking at. I don't expect this earnings to be blown out of the water. Otherwise, if that's the case, then it would obviously break all those resistance levels and go even higher. But that's what I'm expecting for this earnings. Hopefully you enjoy the video. Actually, one other thing too as well. The reason why I'm kind of thinking it's going to go up as well, the analyst expectations are low. I believe there'll be earnings. I hope they have year-over-year growth. I'm kind of skeptical about that part. I don't know if they will have year-over-year growth, just because they do seem to have not been doing well overall in terms of earnings expectations in my eyes, but we'll see. But if we look at the charts as well, let me just go back to auto for a sec. You could see that it's overly sold for the most part. So obviously for today it went up because the earnings is today, so it's overly bought for the day though. And then for the 5-day chart, the 1-month chart is mediocre. Yesterday was oversold, and then on the 3-month chart, it is still overly sold for the most part. If we looked at yesterday just before earnings, and we're coming in at the 6-month on the oversold territory. So for the most part, besides just today and then the 5-day charts and all that stuff, if you went back yesterday, everything was oversold. The day chart, the 5-day chart, 1-month chart, 3-month chart, 6-month chart, all the way to 1-year chart, I believe. Yeah, everything's just oversold. But today we bounced up, so obviously the 1-year chart is naturally going to be higher. So we are climbing up before the close of the day. So that's good. That's a good sign for the most part. Hopefully it doesn't disappoint, and the stock rallies. I do own shares of BlackBerry, by the way, so disclaimer. And I did open up positions, I believe it was yesterday, just because I saw that stock was kind of fairly cheap, so opened up more positions. Hopefully you enjoyed the video. Hopefully you liked it. If you did, consider dropping a like. Helps out the channel. So thank you so much for that. Appreciate it. And I hope you have a great day. Hopefully you guys make money, and I'll see you guys in the next video. Peace.